Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Monday, September 11th, 2023. Before I click through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, and share the content with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, the NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor. We're always looking for 20% swings or better on those individual stock picks. Recent picks have been in IBM, Netflix, I could name many more. Twice a week, we put those out. I would encourage you to take advantage of the 5-day free trial that we offer up front. So you sign up for wickedstocks.com. You have 5 days to check things out. And if you don't like what you see, you can bail out at no cost to you whatsoever. Let's jump to the charts, start with the big picture, work our way into the day itself. Just a reminder that we came off this channel top a month and a half ago, and now at 312.48, well above the market. That's actually considered an objective now, a 2 to 3 month target following a test of the channel bottom a month ago that is presently at 226.54 on the weekly chart, 225.14 on the daily. I'll get to that in a moment. And so that is really the big picture. If you're a 2 to 3 month time frame trader, you're buying the mid to upper 220s, holding out for the 310s or 320s. There are other things going on in the 320s, and that is the dynamic. This comes off that January low. This channel structure may well hold through the rest of the year and into the first quarter. That is the big picture. And on the way up, we've been snagged, I'll use that term, at this descending two-thirds speed line. It's about the only thing I've got going here, by the way, this two-thirds speed line projected off that July high in terms of our next 2 to 3, 3 to 5 week upside signal. Keep in mind, as I just mentioned, holding above 225.14 will keep 312.45 in reach over the next 2 months, 3 months or so. Closing clearly above 250.47 should narrow that possibly to by the end of October or over the next 3 to 5 weeks. Now, I've added a trend line here that today is at 253.80, and that is sort of the how should I put it, the confirmational factor, if you will. Now, nothing confirms. There's nothing 100% here. Closing above 250.47 would be a buy signal as we move into October, but to be a little safer on that, you may await settlement above 253.80. And I emphasize settlement. On a daily chart, my signals are gleaned by end of day settlements. So closing above 250.47 is constructive as we move into October. Closing above 253.80 is more constructive. It basically adds secondary confirmation to the buy signal above 250.47. Now, I know I see some of the comments once in a while on YouTube, and I understand if you're a day trader, especially if you're a new day trader, this can be very frustrating to push through these levels. Perhaps you go long, only see the market to fall back against you, and you take losses. That can happen. Tesla is a very, what I would call, elastic market. It can push through levels without any significant meaning in the long run. And so, do I show it here? Yes. You can see that about a month and a half ago. If you remember this, we pushed through this channel top, even closed above it on a daily basis, only to come falling back. And that's what I call the elasticity of Tesla. And I think, this is really a theory. But it really comes down to its speculative nature. Yes, it's an investment vehicle. People do own Tesla long term, but it's a very speculative market. A lot of day traders, a lot of swing traders. And so the more speculative a market is, in my experience, the more elastic, the more room you need to give some of these line studies to sort of stretch without violation. The same is true for me in the S&P 500 futures, and I emphasize futures, not so much the SPY and the S&P 500 index itself, but the futures have been a speculative instrument from my experience, at least from my years back at the Mercantile Exchange and the Board of Trade in Chicago, that because of that, you need to give them room to stretch through some of these levels and wait for the day to settle out. And that's really what we see a lot in Tesla. If you're looking, by the way, for a market that holds its levels tighter and more predictably, and I say that to a degree, would be the SPY and the Q. Both very good day trade instruments. If you're not trading the SPY or the Q, you may have a look at, once again, wickedstocks.com. Take advantage of that 5-day free trial because they tend to hold their levels better and more predictably than Tesla does. But I like Tesla. I think it's a great day trade market, a great swing trade market. It's a pretty wild market. And yes, if we do, and I'm going to go back to this chart, close today above 253.80. That is our upward pivot point through the rest of the week and really into October trade. I would expect then, once again, by the end of next week, 277.15, this rising channel top. So if we close above, let's just call it 253.80 today, which is, of course, above 254.47 2/3 speed line, then we've got a 1 to 2 week objective at 277.15 and climbing. Swing traders who trade options may consider buying 280 or 290 out of the money calls that don't expire for it. I would go a month out because I think this could take a full 2 weeks to realize. I like to go twice the distance in time just to give this the delta factor, the rate of change of that option relative to the underlying market, a solid delta. It will lose its delta as time decay erodes, and you know that if you're an experienced options trader. Closing above 277.15 over the next couple of weeks should yield that targeted still 312.45 long-term channel top within just another 2 to 3 weeks where we can top out on a monthly, possibly quarterly basis. But if you're looking over the next 3 to 5 days to 3 to 5 weeks, closing above 253.80, I see no good reason to be short Tesla. I see a good reason to be long Tesla anyway. Above 225.14, as you're well aware, this long-term channel bottom tested a few weeks ago, and once tested, the channel top that is well above the market in the 312 handle right now in the weekly chart remains a 2 to 3 month target. Closing above 253.80 puts it in closer reach, nearer term, quite possibly by the end of October. Now, I will say, and I will go back to wrong chart. Let's talk about this chart here. So I don't have the 253.80 trend line coming across here, but I'll say that, pushing through 253.80, 261.18 in reach. If we push through 261.18 today, 266.08 is in reach, and I think 266.08 is a 50%. It might be a 5/8 Fibonacci. Can contain daily buying pressures through the balance of the day. If we do happen to close today above 266.08, and that is a long shot, but it is possible, then this 277.15 formation likely within a matter of days. But once again, closing above 253.80, I see no good reason to be short Tesla as we move through the balance of September. I think the 225.14 is then out of play, and what is in play is the 277.15 channel top within 1 to 2 weeks, that 312.45 channel top by the end of October. Now for the downside, I can go to this chart here. Holding below 250.47 will keep 242.53 in reach. We still have 239.54. That is a rising 2/3 speed line, but I've reduced it to a minor point in deference to this new descending channel bottom, which I think can contain session weakness. So, in terms of the play of the day, holding below 250.47 will keep 242.53 in reach. This is still a decent 3/8 downside Fibonacci that may well contain solid intraday activity. From here, we could rally back into the low 250s on an intraday basis. Breaking 242.53, yes, 239.53 is there, but I really think if we break 242.53, 237.35 is likely intraday, where a daily low can be placed, and we could round back up from here for more than a day. So for you day traders, great, 237.35, great stick your neck out level. Also 3 to 5 day swing traders, I think within a 2 to 3 days of testing 237.35, there is the real chance that we could rally back into the low 250s. Closing below 237.35, it says 222.83 here, but that's a mislabeled line. That was not an updated line. The real target, if we close below 237.35, is the 225.14 rising channel bottom, which FYI on the weekly chart I said at the top is at 226.54. This area at 225.14, solid zone of support to buy into through the rest of the year, really, through October anyway. And if we do close below it, I think this will be the last thing I'll say, and this is just more of a heads up that in the event we violate 225.14 over the next week or two, I do have a 186.62 target that is like 2 to 3, 3 to 5 weeks. Two-thirds speed line. And then we've got a descending channel top, so forth and so on. But I will say, and this is, I think what I'll finish with is if we were to close below this 186.62 speed line in the coming weeks, we've got a good high through the rest of the year. And honestly, I think through the first quarter, I think Tesla gets hit hard again as we move into the first quarter. But, not until then. A solid bottom picking territory long-term at 226.54. If we close below it, we have another crack at it at 186.62, which may well also contain selling through the first quarter of next year and beyond. I'm going to leave it at that, pushing 11 minutes. Thanks for watching. Please click like, share, subscribe, and check out wickedstocks.com.